I thought being a Monday and we've got the A-team panel on today, let's do an A-plus team of companies for our stock of the day. Adairs, Audinate and Ampol all reporting this morning. Let's get the view on from the guys. First up, Adairs. Sales up 13%, coming in at a record high of $564 million, posting almost $45 million in net profit, final dividend of 10 cents a share. So far, FY23 trading indicates Adairs on track to meet a guidance. David, what did you think of the Adairs result? Go to Audinate. I'll give you the wrap up of full three. Audinate. Revenue hit a record $33.5 million US dollars, up 33%, delivered a record earnings, $4.3 million, up 41%. Still, the company is not yet profitable, reported a net loss after tax of $4.5 million. And our final A, Ampol, has declared a record dividend of $1.20 a share. The company sees its half-year profit soar on strong refining margins. Is this what's going through to the Bowser and us paying through the nose for petrol, which reached unprecedented highs the second quarter? Its convenience retail and Z Energy arm bounced back as well, though Ampol notes it's been seeing challenging trading conditions in New Zealand on high fuel prices and Omicron outbreaks. So let's start with the first of the A's. Why don't we start with Adairs? David Lane, what did you think of the result? And what do you think of the share price at the moment?
Yeah, the result was a little bit soft, although the overall sales results were reasonable. Their profit was down by 31%, a little bit soft on most accounts. The shares are reasonably priced. They're on a PE of about 8.5 times and a dividend yield of 6.9% at the moment, but forecast to increase that over time. So reasonably priced in terms of valuations. We've got a hold on Adairs, though. Think that it's probably a stock that did very, very well through the COVID lockdowns, and I think this result tends to show that the sales or the overall profit hasn't been as strong post that, and heading into an inflationary environment, the discretionary nature of their products tend to mean that that they may well not see the growth in earnings that we might see from other retailers.
Okay, Josh, what do you think of Adairs?
Yeah, I like the company. A lot of the retailers have been performing well over the last few months, and a few of them popping nicely on their report. It's fluctuated a bit, the price action this morning. Started off down, maybe some orders left in the market overnight, being a down day. It did fluctuate into positive territory intraday, and now it's down again on a down day. It is quite a low volume stock, so I guess reporting on a down day, I'm not reading too much into the price action at this stage. Looking at the numbers, 13% growth, a little bit of a normalisation there. It's up about 45% over the last 2 years, its revenue. So a little bit of a cool off after such an extraordinary year the year before. Obviously we're seeing those earnings pressures come through. All of their margins were squeezed, and they are paying a nice dividend on paper, about a 10-cent dividend, which works out to be about 5.7% just in a single payment. However, to achieve that with the squeeze in earnings means their dividend ratio is up around 68% at the moment, so quite high, and they had sort of disappointing from Maqro. So I do think the stock's quite low relative to where it has been, so that'd be a hold from me as well.
Okay, all right. Audinate. Josh, what do you think of their report? They've been affected in the past by lockdowns and a shortage of silicon chips?
Yeah, again, looking at sort of that 2-year performance, they've had, obviously this result has been record revenue. Over the last 2 years, they've grown 28% per annum. So it's a little bit of a good example of a stock getting caught up in the sector-wide sell-off. It was really caught up in that tech sell-off. Whilst in the background, its fundamentals kept improving despite the share price. And that's probably why we've seen it play a lot of catch-up. And they do have the monopoly in the industry, as we all know. So I think it's a really good result from the company on a longer term basis. And I think if you're involved in the company, that's probably your skew is towards the long term. So yeah, I'd be happy with a hold/buy on Audinate at this stage.
All right, David?
With Josh's views on the result, it was a very good result. As you mentioned in the intro, that the company's not quite profitable, but certainly on the track there. And another couple of good results like this one, we could well see the company head towards profitability in the next 12 to 18 months. Not a stock that Ords officially covers, but having a look at the result and the momentum behind it, if you are into tech plays, it's probably one of the better ones that we've got listed in the market.
Yep. So what would you have it as, a hold, or?
I'd probably have it as a buy at current levels based on today's result.
Okay. And finally, to finish our trio of A's reporting today, Ampol, David, a really good result, higher refining margins. Of course, they got government assistance, didn't they, to keep the refinery going and competitive?
Yeah, that's right. Their Lytton refinery has been helped by some government assistance, as well as some improvements in their production there. So yeah, positive from the refinery margins. They didn't provide any guidance in the outlook, but they did actually provide, I suppose, some commentary, and their commentary is actually fairly positive. In particular, they're looking for some additional growth in their retail segment, and think that should continue to grow fairly well. We do like Ampol. We've got a buy recommendation on it, and think that today's result justifies that, and think that it should have some further growth. The other positive thing about today's result was that they increased their dividend by more than what we were anticipating. So another positive there as well.
Josh, Ampol?
Yeah, our analyst team is very much on the same page. They've got a buy on this. They think today's result was really good as well. A lot of it has been priced in. Everyone's been very hopeful of these energy stocks. We've seen a few reports from these energy stocks come out where, they've seemingly been strong on paper, and then it's just been, I guess, a little bit of those really high expectations on some of these companies. But largely I'm leaning into those energy plays on the Aussie market. I think that's what's going to make our market outperform, particularly markets like the US, which are a bit more high growth. And energy, coal, that's all going to be a great contributor to our market anyway.
Okay.